What is going on, my people? If you don't know who I am, my name is Clarissa, and I'm Javier's partner both in life and in business. Together, we have helped over 400 credit and funding companies scale by implementing the same system that helped us scale our own company to past the 7 figures. And today, I want to talk about something that is going to upset a lot of people in the funding industry. That is that authorized users are not going to help your clients get approved for high limit business credit cards in 2026. Now, I know that this is going to go against everything that you have been taught so far. I know there are still a lot of people out there selling authorized users packages for thousands of dollars that will help get your clients get approved for business funding. But we actually ran tests on this, and I'm about to show you the proof that authorized users don't matter as much as they used to anymore. Mostly for getting approved for high business credit cards. They will help increasing their scores, but it doesn't ultimately mean that they're going to get approved for higher limits or get approved at all for business credit cards. So if you're still recommending authorized users to your funding clients or you're thinking about buying them for yourself, pay attention because this is going to save you a lot of money and also a lot of time. So let me first explain what the old authorized user strategy used to be, because it used to work for a while. So before, what we used to do was add to your clients as an authorized user on a high limit and aged account. So their credit report will show these accounts as if they were their own. The banks will see their long credit history, the high limits, and this will help them get approved for higher business credit card limits. Now, this used to make sense. It instantly added credit history, it lowered the overall credit utilization, it showed higher credit limits, and it demonstrated the ability to handle larger amounts. Authorized users companies will sell you packages for like $1,000 all the way to even $5,000, promising to add 20 plus years of credit history and let's say $50,000 more in credit limits onto your client's personal credit report. And for a while, this actually worked. The clients would see their score jump 50, even 100 points, and then they would get approved for higher business credit limits. But that was then. That is not now. We started noticing something strange with our own clients. We had some clients with perfect authorized user setups, 20 plus years of history, 200 plus in user limits, 100 plus credit scores, and they were still getting denied or approved for very tiny amounts. Meanwhile, when we had clients with even a little bit of a shorter credit history, but all primary accounts, they were getting approved for $100,000 plus in business credit. So we decided to run a control test to see authorized users if they actually mattered anymore for business credit approval. So here's the test, and this is exactly what we did. So on group A, we had heavy authorized users, 10 clients with 5 plus authorized users accounts each, with an average of 15 plus years age added from the AUs and $150,000 in authorized users credit limits. The credit scores were around 750 and 800. And we applied for the same exact business credit cards. Instead, on group B, we had primary accounts only, 10 clients with 0 authorized users accounts, all primary cards and loans, 3 to 7 years of actual credit history, 50 to 100,000 in primary credit limits, and the credit score on 720 to 780, and we applied for the same business credit cards. We tested this with Chase Inc. business credit card, American Express business credit cards, Capital One business credit cards, Wells Fargo business credit cards, US Bank business credit cards. Now, if the authorized users still mattered, Group A should have had a significantly higher approval rates and limits than Group B. But here's what we found, and it's probably going to surprise you. Group A would have a 60% approval rate. Group B instead had a 75% approval rate. Group A had an average of $35,000 of average in limits, and Group B had $52,000 of average credit limits. Now, Group A would still, 20% of them would get a $50,000 plus on limits, and instead Group B, 40% got $50,000 plus on limits. So the clients with the primary accounts only actually perform better across every metric. So after analyzing the results and talking to our banking contact, here's basically what we discovered. The banks have gotten much smarter about identifying the authorized users' accounts, and they can clearly see which accounts are authorized user versus primary, the patterns that indicate purchase the authorized users' accounts, and that the accounts don't match the applicant's real financial profile. But here's the most important part that people are not really talking about. the banks no longer count for authorized users the way they used to. They specifically do not give weight to the age of authorized users' accounts, the credit limits of authorized users' accounts, and the utilization on authorized users' accounts. So even though your client's credit report might look stronger on the surface, underwriting systems are now trained to discount those factors completely where they're coming from authorized users. In other words, authorized users may still boost their scores lightly, but they're no longer improving their credit depth, their trustworthiness, or the approval strength for high-limit business credit cards. Which is exactly why we saw clients with massive authorized user profiles still get denied or approved for tiny limits. Now, I know this information might be shocking, and if you're already relying on authorized users in order to optimize your client's credit profile, you might be thinking that you're screwed. The good news is that there are much better strategies that actually work in 2026. That's exactly why we created the Funders Academy. This is where we teach current strategies that actually are getting approvals for just $99 a month. We stay on top of it all and all the banking changes so you don't waste time and money on outdated tactics. So if you want to join the Funders Academy so that you can stay up to date on all the data points, all the strategies to be able to fulfill on funding for your clients, the link is in the description below. Now let me actually continue with what works instead of using just authorized users. Since authorized users don't really work anymore, there is a better way and a better strategy that comes into place. Instead of trying to artificially add age with authorized users, we now use rent reporting and other alternative data reporting to build legitimate account history. What this does, like using the rent reporting, it adds a verified payment history to the credit profile. It builds the account that there are legitimate, shows consistency and responsibility, and it strengthens the primary profile instead of manipulating. The rent reporting combined with 3 to 5 primary credit cards with good payment history, at least one card with $10,000 plus of limits, and a mix of revolving and installment accounts with 2+ years of primary credit history and a low utilization on their primary accounts is what actually is going to help. Instead of buying authorized user, you need to help your clients build legitimate primary accounts before applying for business credit. And this is one of the biggest shifts that we've made into our optimization process, that it builds real age and not borrowed age. So the next thing that you have to do is focusing on building the banking relationship. And this actually matters because you need to have a business checking account with the target bank that you're going to be applying with. 30+ days of banking history, regular deposit and activity, and a personal banking relationship as well. So what you should do is basically open a business checking account 30 to 60 days before applying. If you can wait longer, even better. You need to make regular deposits and build a genuine relationship with the business bankers. Because what business bankers are looking for are a legitimate business setup, LLC, EIN, and business address, a business credit report with trade lines, so Dun and Bradstreet profile, and a business bank account with activity and realistic revenue projections. When we publish the result, here's how the authorized user industry basically responded. They would say that you didn't test the right type of authorized users, our authorized users are different or they're better, or that we needed to add even more authorized users in order to see results. But the truth is that these are all deflection tactics. They're all just objection handling. The fundamental issue is that the banks have evolved and their underwriting discounted basically authorized users regardless of the source or the quality. Now, you don't have to just take my word for it. I actually want to show you an article from My FICO Score. Now, as you can see here in the My FICO website is talking about the authorized users account. Now here, general information about authorized users, their accounts that can appear on your credit report and can impact your FICO score. This means that both positive and negative information can impact the authorized user's score. We all know this, like if you have an authorized user's account and they max it out, it shows as maxed out in your side as well, and it can ultimately hurt you as well. Now, the thing is that the thing that I want you to pay attention to is this one right here. In recent versions of the score, authorized users accounts have less impact to your FICO score than primary accounts. So while being an authorized users can help build your credit history, it's also important to have credit account where you are the primary account holder to show that you can manage credit responsibly on your own. In older version of the FICO score, authorized users accounts were treated the same as primary account holders. That's not the case anymore. Now, if you have already clients who already purchased some authorized users, here's what you have to do. First off, don't panic. Authorized users, they won't hurt their credit score. They might just provide a small core boost. They're just not a game changer anymore like they used to be. Before, they used to actually work and move the needle. So what you need to do is focus on primary accounts. Start building legitimate primary credit accounts, request line increases on existing primary cards, open new primary accounts strategically, and build a genuine banking relationship. Set realistic expectations and don't expect authorized users to get you approved. You need to focus on the overall credit optimization, build the business credit foundation, and develop legitimate business operations. Now, here is where business credit is heading in 2026 and beyond. There's going to be more verifications of business legitimacy, cross-referencing personal and business credit. They're going to ask for real-time income verifications at some point. They're most likely going to enhance the fraud detection, and they're going to do more of relationship-based lending with emphasis on banking relationship. So you need to make sure that you're building a strong relationship with your clients and their own bankers. Now, the bottom line is that banks are getting smarter, and quick fixes like authorized users are just becoming obsolete. Now, I know this is not what a lot of people want to hear, but unfortunately, authorized users are not going to help your clients get approved for high-limit business credit cards in 2026. We already saw that primary accounts are the ones that actually perform better. Now, instead of wasting money and time on authorized users, you need to be focusing on building legitimate primary accounts, developing real banking relationship, creating genuine business operations, and optimizing the overall credit profile. The funding industry is evolving, and the companies that adapt to those changes are the ones that will actually succeed. So if you want to learn the strategies that actually work in 2026 and stop wasting money on outdated taxes, I want you to join the Funders Academy for just $99 a month so that you can stay top of mind. Now, the links are in the description. Don't let another month go by using strategies that don't work and when you can actually implement the tactics that actually are getting high limits approvals. This is Clarissa, and I'll see you in the next video.